What is up, everyone? We have an incredible episode today of the Nakamoto Gauntlet. We are highlighting the Houston Firefighters Relief and Retirement Fund, the first pension fund to ever put Bitcoin directly on the balance sheet. It's going to be an incredible episode, so tune in. And without further ado, you all are tuned in to the Nakamoto Gauntlet, a show where fund managers can explore Bitcoin on their balance sheets risk-free. I'm your host, Dom Bei, a firefighter on a mission to bring Bitcoin to unions, pension funds, and workers everywhere. So what's the gauntlet, you're asking? My co-host, Rapha Zagury, created a groundbreaking tool, the Nakamoto Portfolio, to input Bitcoin into any investment portfolio and model the impact. Of course, if we're going to run a gauntlet, we need some backup. So we brought in the legendary Joe Carlasare. At the end of each episode, we jump in the hot seat and select a Bitcoin allocation for our fund in focus as if we called the shots ourselves. So get your mouthpiece in, mount up, and let's run the gauntlet. I'm going to bring in Rapha. I'm going to bring in Joe. Welcome. We got our little padded joust ready for the gauntlet. But this next guest is someone that ran the gauntlet in real life, not a hypothetical. So super excited. How are you guys doing today?
Very good. Great to be here.
I'm excited. I'm going to both of us are going to have to, all three of us are going to have to up the level of profanity to make up for our good friend Greg Foss not being here. So let's get that energy up, and I'm excited to talk.
For sure.
Profanity and bullishness. We all have to be more bullish and more profane. But yeah, Greg is missed. We invited him. We hope he'll be back soon with us here. He's dearly missed. And it's great to be back. I think, we've seen since we started in about, 9 months, 10 months ago, right? A lot has changed, and the institutional adoption is really here. And it's great to see, I see more and more institutions using the Nakamoto portfolio to do simulations, allocations, which is amazing and, mind-boggling to see. But at the end of the day, as you said, we're here. We want to speak in their language, right? And show them that using the tools that they already use, Bitcoin should be part of every single portfolio.
For sure. And a little bit of a pullback in the last couple of days over the weekend, something, of course, only possible, right, with a 24/7 trading desk. But I think we're still holding up okay, Rapha, on our little gauntlet board of hypotheticals. Where are we at for our previous allocations? I want to make sure we're still good and I don't have to go into hiding or anything.
Yeah, I'll share the results. We actually have them live every single day on Nakamoto Portfolio, right? And if you could scroll to the link that it's there in the Nakamoto Portfolio and Nakamoto Gauntlet, we keep the track of every single allocation or hypothetical allocation that we've suggested for each of the funds. If you look on the bottom, the Ontario Teachers Pension Fund, which was the first one that we look at, 240 billion portfolio, right? We ran the numbers, look at their portfolio, saw if Bitcoin made sense. Our suggestion was anywhere between 1% and 3%. We have a 2% target allocation as a suggestion, of course. And when we made that recommendation, Bitcoin was at $30,000, or more than doubled since then. Just think, how many, in terms of dollars and impact that could have had in the portfolio. That's just, again, it starts to a crowd. That 2% allocation would be more than 4% allocation to the portfolio, right? And on the way up. The Wisconsin Public Pension, which was the second one, the results are even better because when we had the show, Bitcoin was even lower than when we did the first one. Was it around $25,000? So it's 150% return from the beginning. We also suggested a 2% allocation, and we'll get to it towards the end of the show. But as we always say, 0% is the wrong answer, and for most of these, anywhere between 1% to 5%, it's usually what they should be thinking about.
Very cool. Well, I know we have an incredible guest today, the CIO, Ajit Singh of the Houston Firefighters Retirement and Relief Fund, their pension fund, $5.1 billion assets under management, and the first pension to ever bring Bitcoin directly on the balance sheet. I'm super excited. Ajit, welcome. We are honored to have you on here. Someone that went through the bear market, and I know you were at the UN prior. If you want to give us a very brief intro of how you got to Houston Firefighters Pension Fund. I know you got hired, I think, in 2015, so you've been there quite some time.
Yeah, so thanks for inviting me for this panel. Um, yeah, so I was in United Nations Pension Fund, Joint Pension Fund. It was a $65 billion fund when I left, and I was the first chief risk officer in the UN fund. That was a post created after 2008 financial crisis, and one of the condition was that the Secretary General was instructed to bring the chief risk officer, but it has to be from industry, not a politician. So that's how I was there. I was there for 7 years. It was a great experience, and but I always wanted to come back to Texas. I mean, I had a home in Texas. I was living in New York, and in summer I used to work out of Switzerland. So there are a lot of traveling. So I came to Houston in 2015 or almost 2016, December of 2015. So the big adjustment was the size of the fund from 65 billion to 5.5 billion. But I also found it was much more flexible and much more easier to manage because not much bureaucracy. So that's why I started here in 2015, and you know mostly working on digital asset allocation. Performance has been very good. Has been first quartile fund for last 7 years now.
I saw you guys had an excellent performance across your time there. So hats off. That is not easy to do in this day and age for a pension fund. And I guess a great place to start, the Houston Pension Fund serves 3,700 firefighters and their families. And today we're talking about your Bitcoin allocation in 2021. So how did you get introduced to Bitcoin? How did it come across your table? You know, what got you interested, and what led to you bringing it to the fund? And if I can quote you from an article when you guys did it, you said it's something we just can't ignore. And what led you on that journey, and how did you get there?
Yeah, so I mean, even before I went to the UN, my original background is computer science. So I was graduate in computer science, and then I was working in. I started my career in IBM Research Lab in New York, right? So being computer science and background of the, working in IBM, I was kind of naturally in tune to learn something about Bitcoin when it came out. So I heard about it about 2010, 2011. And since then, I downloaded the code. I saw, because I know C++ very well. So I went through all of that. And I just thought it was very interesting. I didn't really pay much more attention to it, except that given that it works on a NP complete problem, that was my interest. So I started looking at it. I never thought as an investment vehicle until I think 2016, 17, when it went through like the third cycle of halving, and after that. And since then I started thinking about it, that it does require becomes an asset class. It really came to focus in my mind in 2015 Greek crisis, when Europe was having problem in Greece, and there was a good chance that Greece might abandon Europe and go back to Dakma. And at that time I saw the Bitcoin going really high very fast, which is basically becoming a vehicle for people to preserve their capital, or get it out of country, bypassing the capital control. So that's where I started really looking at it. I even talked in the UN for time being about that thing, but it didn't go anywhere. So it was in my mind. So when I came here, I decided that once it becomes a little bit more mature, volatility becomes a little bit less, I would actually go to the investment committee and make a proposal for it.
Did I hear that right? As CIO of a pension fund downloaded the code and read
Love
the
it.
code? That's like,
I love it. I always say that, to really grok Bitcoin is so multidisciplinary, right? That you need to have people that understand so many different facets. And this is a challenge, I think, with a lot of the managers that we see out there. But one question I wanted to ask here, Jit, and Dom, I don't mean to jump in here, but just a quick question is, as you were going through, your experience, there are a couple of things that came to mind, which is something that we mentioned here a lot, which I think until about a year ago, and this is changing, it was a reputational risk to mention Bitcoin, right? Just like you, I remember mentioning Bitcoin at Deutsche Bank in 2015, and I can tell you that didn't go well at
You
all.
didn't get invited to the Christmas party that year.
No, no, pretty much not. I wasn't going anyway, but anyway. But I wanted to hear like how it was for you, going through this. Would love to hear a little bit more about the event that you went when you mentioned it, and eventually how did you come across and how were you able to get people to see that Bitcoin is really, as you said, the best savings technology probably ever invented. So
Yeah.
love to hear that.
I think in terms of reputational risk, you are absolutely right. It is actually a carrier risk. Um, and like I was quite it took me lot of preparation to actually take a proposal to the investment committee. um, Basically, you can make all kind of proposals for using the data crunching, that it diversifies it, low correlation, higher positive skewness and all those things. But all that data is based on not sufficient trading, right? I mean, last 15 years is not a sufficient institutional quality trading data, which you can actually create the statistics to actually justify the the position, the thing. So the way I went to the investment committee, I said, okay, we have this new technology, blockchain, right? And we need to actually take pay attention to it, just like any other upcoming technology. And one of the best way to do that thing is to take the foothold in two of the most popular protocols in the blockchain. One is Bitcoin and one is Ethereum. One is proof of work and one is proof of stake, right? So I put half and half. And my proposal, I mean, even though I did present all these stats about correlations and diversification, all those things, uh, my ultimate proposal was that consider this thing as a uh, call premium and a call option for an upcoming technology. If we go down, our downside risk is 50 basis point at the max. But if we go up, you know there is quite a bit of upside risk. And then as the technology matures more and more, there would be more vehicles or more tools maybe coming out, which we can also invest in. So like L2 level 2 protocols, and anything else will comes up, we will consider the going forward. So we started with 50 basis point of allocation to digital assets. Biggest problem was, of course, the custodian. As a pension fund, you cannot custody at your ledger drive or anything like that. So it took us some time to actually find a custodian. We chose NIDIG. We looked at both Coinbase and NIDIG. It was just coin toss basically. So we chose NIDIG. And at about 2020 we dropped Ethereum, because the legal status was not very clear, right? So we decided to convert all our Ethereum to Bitcoin. So at this time, we only have Bitcoin.
Yes.
There is no second best, right? I heard somebody say that. So.
Yeah,
That's awesome. I did not know that.
yeah. So I mean, my motivation was still to actually take a foothold on a protocol level, right? So I mean, I do feel that Ethereum has a promise once it sorts out all its legal status. So, but when until then, I don't have to take that risk. So I'm in Bitcoin at this time. But in terms of reputational risk, I mean, after we did that thing, it was not only a reputational risk for me, it was also for the whole board, investment committee. And the moment we did that thing, it became a big news. Even Al Jazeera covered it, which was very surprising to me. And yeah, it was a lot of calls from a lot of people, newspaper, that this is speculative and this is not green, not ESG friendly. ESG crowd came out really hard, but that is very easy to debunk. You know, KPMG actually has a study where they actually calculated that people there is more energy wasted by people who are not switching off their TV, you know, than the Bitcoin mining. So
Sleeping with the TV on.
Yeah.
It'll get you every time.
yeah. So
Ajit, sorry, Ajit, I had a question for you. So you said, and I think I caught it, that you thought it was career risk. I thought that was the word you used. Have you noticed any shift among the investment community, among the circles you run in, between when you did this in 2021 and today? Obviously, the approval of the ETFs and increasingly institutional adoption burgeoning. Do you see any of that? And then, just as an additional sort of, I'm curious if you could comment on this too. Where do you see Bitcoin in frame of the broader economic, the broader macro issues? I mean, one of the things we talk about in Bitcoin a lot is issues about debt and fiscal deficits and currency debasement. If you could speak to those issues, I'd really appreciate it.
yeah. So when we did the allocation to Bitcoin, there were no ETFs, so it did not have what I call institutional blessing. So it was just a token which we had, and custody was the big problem. And there were a lot of risk. I mean, carry risk in a sense that there were times when we had to move custody, and you have to do your transfer yourself, and it's quite anxiety driven process, if you make a mistake. So but in terms of place in the portfolio, I actually see pretty much as a better substitute for gold, and we have gold also in our portfolio. 2% of our portfolio is in gold, which is actually doing very well. But I see this thing as a substitute for gold. And even though they say that it is I'm not fully convinced about the case for hedging the inflation, because there are other tools also which actually can hedge inflation. In fact, public equities can also hedge the inflation. They have hedging delayed. In the beginning you cannot pass the cost, so they take all hit, but then pass is passed to the business, to the consumer, right? But it does actually provide a very good store of value, a part of the portfolio which is not going down. So what I found out is that it actually improves the conditional value at risk of the portfolio. That is, in the downturn, when everything is going down, Bitcoin actually helps a little bit. So my allocation is not sufficient at this time. It is only 0.5%. But the way things are going, I think it will be 1% not too long from now, and which is just fine.
Ajit, you mentioned how Bitcoin's superior to gold. And for those that don't understand the inner workings of a pension, there's two areas where I agree with you and I see a benefit. One is liquidity and access to liquidity quickly. You mentioned custody as a problem, but with advance, as custody becomes better for institutions, it becomes, I think, superior to gold in that sense. And then you have the accurate pricing of the assets for the actuarials, and the fact that Bitcoin is priced very accurately with 24/7 trading. Can you talk on those and how you see them playing into pension funds in the future?
Custody is not an issue anymore now. Now with this ETF, as an institutional investor, custody is not really an issue. It is actually at par with gold now, because gold also you can get exposure through ETFs. In terms of audit and all the thing, that is a tricky subject, because lot of auditors are not familiar with auditing digital assets. However, having ETF makes it very easy now, because now it is no different than any other ETF in the portfolio, right? So even in terms of pricing and all the thing, I mean, yes, it is traded 24 hours, 24 by 7. ETFs are priced at 4 p.m. Eastern time, right? So that's the pricing we are going. So our auditing process is now exactly same as any other ETF. But it does change the risk profile of the portfolio quite a bit. Even with 0.5%, I'm seeing that this year, what I call marginal contribution to risk is high, and also marginal contribution to return is high. So one of the thing I see that in terms of one of the question was asked, how I see the changes in investment committee and attitude. I have not seen at this time yet any major changes in investment committee and attitudes. I do talk to a lot of my peers with other pension funds, but a couple of pension funds investment staff came to me and they asked me how did I prepare the recommendation to the investment committee and what kind of arguments I made. So I helped them creating that thing. I don't know if they have gone to the investment committee or not, but I talked to a lot of other peers. It is always a discussion, but at this time. I have not seen a very serious effort going into a pension fund investment committee for.
Ajit, I'm sorry. I just want to make sure I heard that. So you actually talk with other potential pension managers, and you've shared, I guess, whatever you put together in terms of the presentment of the issues. That did I hear that right? And
Yes, yes.
okay,
So one of the question they were asking is that how do we go to the investment committee, because it's a such a new asset class and data is not that reliable. 15 years. So what kind of arguments you have to make to the investment committee? So I helped a couple of pension funds um, um, like how to create the recommendation. I have not followed up with them like where they are, but I know this thing that the fact that they are talking about it, that is also only a matter of time before it actually
yes.
becomes a proposal to the investment committee. I mean,
What have you heard? Like, what has been the pushback among the folks you have talked to? What did they?
actually there's no pushback now. It's just now they are trying to figure out how to make a compelling case to the investment committee, because going to investment committee is a big deal in a sense that you don't want your proposal to get rejected. Because if it get rejected, it become a matter of record, and then it's very difficult to bring it back up again, right? So I have not seen any resistance or concern. It's just that they want to make a bulletproof case to go to the investment committee, and that's what it is.
Ajit, do you feel the career risk is still there? One of the things I wanted to tie on into is that when you guys purchased, you survived. Not only did you hold on to the assets through the bear market, but you're still the CIO, which I believe is nothing short of incredible. I mean, you weathered that, and kudos to you. Some of the articles I pulled offline during that time in 2022, after the downfall or the downtrend, Wall Street Journal said public pension systems join those stung by crypto crash. There was an article that said crypto plunge, a cautionary tale for public pension funds like Houston Firefighters. How was the support from your group? How was the support from your board? And what was that like trying to navigate that? And I'm sure, you're seeing those, not realizing that the risk is very low, but this is being pitched as such a big deal for your pension fund, when in reality you had a great year in 2021 and 2022.
Yeah, I think that's the diversification of the portfolio, right? So if one asset class is going down, the other one is picking up. So even though the digital assets were going down, I had a year with the whole portfolio made 33% return. So which is very good because I'm also diversified in other countries in Asia and everything, right? So, but interesting thing is that the Bitcoin it does stick out, right? I mean, every invest our investment committee meetings are open meetings, so anyone can come in. So people will come in and ask, how do you feel now? it's like it's I'm feeling fine. I mean, this is the nature of investing. Things go up, things go down. I mean, Disney stock went down quite a bit, but I give them bunch of other stocks which have gone down more than 90%. One of the thing which we invested is in Rivian, which is actually more than 90% down. So I mean, it's just a matter of that's the process of investing, and focus is on long term, and long term means at least 5 years. And I did 5 years expectation management, because that means I will have gone through two halving cycles in 5 years, right? So that was one of my position, that we have to wait for five years. So we started with $25 million. It went down all the way to $9 million, and then all the articles started coming in. And then I actually wrote an article, another in pension investments, and my position in that thing was that yes, it is risky, and yes, it can go down, but there is also another risk. One of the big risks in digital assets is not to have any exposure. you know so yes, exposure is a risk, but also not to have an exposure is also a big risk. So the trick is not to have a binary discussion that yes, we have Bitcoin, we don't have Bitcoin, but how we manage the risk. That is, we control by amount of exposure. And even though digital assets or Bitcoin is in my portfolio, it is, I did not have to increase the risk budget of the portfolio because the exposure was at a level where I can manage it.
Ajit, let me go through, like, there are two things you mentioned that are super, super interesting, and I think it's in line with what we see all the time. And I'll share a story. So last week, I was talking with one of the largest family offices in Latin America, and of course, talking about Bitcoin, right, and how it fits in a portfolio. And they have zero allocation across their clients, or they had, right? They're like, we don't have any allocation. And there were two things that I said that I could see immediately that got their interest. First of all, as you said, I think the fact that there is an ETF out there helps tremendously. It's a plug and play asset that they can put in their client's portfolio really easily. They said in the past, we considered, but then we found out that we need to open accounts for each of our clients. For us, that we're doing 1,000 different things, just didn't make any sense. So that definitely helped. But then, when I told them, like, listen, a zero allocation is the wrong, they're all the answers, but zero allocation, I can tell you right now, it's the wrong allocation, because when you look, as you said, the lack of correlation, the fact that it helps your drawdown, right? You shouldn't be just ignoring this asset. And then they started having questions about the fundamentals, and what I told them that I think got them across the line is like, listen, they mentioned the track record, which is something you mentioned as well. Well, Bitcoin only has a 15-year track record. And I asked them, so, but you have hedge fund managers on your portfolio, right? What is the average track record that you ask for your hedge fund manager? And said, well, it's a minimum of 2 years, but the average will say it's like 3 years. I said, yeah, Bitcoin already has 15 years of track record. So that should be more than enough for you, right? And I said, and when you look at hedge funds, private equity, venture capital, you don't get any transparency, right? You get a report every 6 months, maybe, right, depending on the manager, and they don't tell you exactly what the rationale in a lot of the cases is, and you're comfortable with that. And that I could see when I mentioned that, I could see that they changed their. They're like, yeah, actually, we're probably overthinking this, and this is something that I've seen with other people in the past. But super interesting here what you say. Just a quick question, going on another topic, because then I just like you, I don't have a computer science background, but I love coding. I've coded since I was very, very young. And I remember, just like you, when I heard about Bitcoin the first time, downloading the code, going through like pretty much everything, right? And there are a few things that really got my attention when I read the code. I would love to hear, what were the things that got your attention, and how were you looking at it when you reviewed the code?
Well, I mean, I downloaded the code for because I really wanted to understand how did he implement proof of work, right? And I mean, given my other day job and all the thing, I didn't go very deeply, but I just thought that solution was very eloquent, but it has to stand the test of time, right? So that's why I was just watching it, because proof of work, the way it is implemented, it still has to um, withstand test of time, and there is always risk that even now that there could be error, like which no one has found it yet, right? Or some, so that is a tail risk which actually I have to tell my investment committee that it is entirely possible that one day you could have double spending and then you're done, right? Your portfolio goes from to zero, right? So but that was, yeah, but then coming back to your thing about data and transparency and history, the length of data history, um, yes, it is a 15 years of trading data, pricing data, but I could not use that thing reliably in my models, because the data is, first of all, it's not institutional quality data, right? It's a small data, or some lot of retail people are doing the trading. There is no big trading. That is why, like in first second halving, you see like 800x or something like that. You're not going to see it now, because as an institutional investor, we have risk budgets, right? And we have allocation ranges. So if suddenly it goes 10x, I am actually forced to sell, because I have to bring it back to the
Yeah,
targeted
look,
rate,
Target.
right?
Yeah.
And if it goes down,
how
then
often do you rebalance your portfolio?
I rebalance every quarter. But what I did is that I created the range for this thing proportional to the volatility. So even though the
Yes.
target weight is 0.5%, my range is up to 5%.
Mhm.
So I'm not constantly trading in and out.
What's the top range again? Which percent you said?
5%.
Okay. Well, coming up soon, we might want to bump that up a little bit, but
Yeah.
uh,
Ajit, I'm sorry, Dom. Did you have
no,
something?
get in. No, get in. Get in.
I'm just curious. Obviously, you have the hat of managing, the pension of firefighters, which is you have to be prudent. You have to keep those target allocations. But I'm curious if you could speak to your personal belief and your personal expectations for the Bitcoin market. If you personally, have any investments in Bitcoin, where you think the market's going long term, where you think it will, be relative to other assets. And I'll just say my bias, right? Like I look around, I look at a lot of asset classes, and I see a lot of it being far more saturated than Bitcoin. So it gets me really excited because I think it's a growing market. I think it's going to gobble up part of those other asset classes, and that is really a bullish case for Bitcoin, right? So, but I'm curious where you see it, 10 years from now. What does it become a mainstay in every single major investment portfolio, or do you think it's more idiosyncratic as it moves forward?
In terms of institutions, I see 10 years from now, I would be surprised if any pension fund does not have any allocation to it. I mean, it could be small allocation, but I cannot see any reason why it would not be, right? Because ETFs makes it, if you have gold, then you have no other reason, you have no argument to have not allocation to have Bitcoin, right? I mean, arguments are exactly the same. Inflation hedge, debasement, and preserving the value, and all those things. So there are no unique argument in Bitcoin, except that if you're investing in a personal basis, you don't have to have custody of gold. Just like you have to have physical gold, it is all electronic, and so personally I believe in this thing a lot. I have had Bitcoins personally for quite some time. I had many, I lost many through Mt. Gox and all those things, and um, but I
An
have now.
OG in the pension fund.
Yeah, but then with ETF, it actually opened the door quite a bit, because now I can have um, it in my IRA, right?
Yeah,
And a lot of people don't realize that how big the deal ETF is, because yes, you could have Bitcoin and in your self custody, but if your money is in IRA, you cannot take it out from IRA to buy Bitcoin. So
right.
you have to do the transition within the IRA itself. So it actually opens up a lot of people IRA account to actually have a Bitcoin exposure.
Yeah, it's just interesting because there's a lot of pensions that don't have any allocation to gold, right? So I'm wondering if they'll change their tune when it comes to Bitcoin. What do you think
Well,
about that?
he was talking about hedge fund, right? I mean, every hedge fund will have some allocation to gold.
Oh, a hedge fund. Okay,
Yeah.
right.
So they are just very non-transparent. You have to go through the reports and all those things. But I think one need to have allocation to gold. Except gold allocation could be quite frustrating. It's actually quite boring. You could go for 10 years straight with no gains, right? And then all of a sudden it just explodes. So my strategy is that at this time gold is an up run now. So I will ride this one, but then I will start transitioning out of gold to the Bitcoin even more.
Ajit, I remember, I look into a lot of with CalPERS, and I talk, I'm in California, and I talk a lot with folks with the CalPERS system. After the financial crisis, CalPERS referred to the following 10 years in private equity as the lost decade, because they stayed out. They were very cautious. I see something very similar. When you mentioned 10 years, I see 10 years being incredible for Bitcoin. And I believe what you're saying. There's no pension that has a reason not to have Bitcoin, yet some will. And I think that we will see in 10 years pensions going, oh, we really have to get into this. It was the lost decade. Other pensions that got in did great. They have exposures to increased amounts of private equity. While Bitcoin stuff is covered, no one covers the real estate kind of trouble in certain portfolios. I don't know if you saw, but CalPERS bought a piece of land for 76 million in 2006. They just sold it for 16 million. So they carried that for 18 years with a massive loss, yet that gets no coverage in the newspapers. What do you think is going to wake some of these pension funds up, and like that shake them moment to realize, hey, like we have to get in this?
I'm very sure that a lot of these pension funds are already looking at it. In fact, the investment staff is probably a lot more enthusiastic about it. It's just the process to go through the committee approval and the board approval takes time. But I doubt that there is any pension fund which is not thinking about it. It is in their consciousness now, right? And so it's only a matter of time it will come in. And now having this ETF, and now today I heard that Hong Kong also approved the ETFs.
Mm.
So that actually helps Chinese investors to actually have something there. And so yeah, so I mean, it will come. Institutions will come, and they come quietly. They don't have to have a, like when we did this thing. I mean, it's only because our meetings are open and our minutes are open. It went to the news, but we don't go out to the news media and told that we did that thing. In fact, I'm getting a lot of requests for interviews now that Bitcoin has gone up, and I'm not giving any interviews anywhere.
Except
except
here.
except right here with the gauntlet. Um, do
A quick,
you
quick question.
go for it? Go for it,
Just
Rafa.
on that, yeah. Uh, like when you were talking, and I'm sure you talk to other colleagues out there, and at least on my side, I hear a lot of people say, "Oh, it's too late. Price has already." It's easy for you to say, because you were in Bitcoin and Mount Gox and a lot of, but now price is just too high, right? Do you hear that? And what are your thoughts on the current price of Bitcoin and where it could go?
Yeah, see, that is more a factor for individual investor, but for institutions, we think in terms of percentage allocation. We don't think in terms of price, right? So price is irrelevant to us. I mean, if we say we want to have 2% allocation, we're gonna go buy 2% of worth of bitcoins. Does not matter what the price is, right? So for institutions, it's a different. For individuals, yes, 65, $70,000 could be quite a big thing, but then. Um, I hope that someday, or that day is not too far, when you start pricing satoshis instead of Bitcoin. You know,
Yeah, this
because
is it.
Yeah, we hope for that day too. And
yeah, because it sounds psychologically it feels very good that yeah you bought 2 million satoshis
Yeah.
instead of like bought like 0.00% of Bitcoin.
But this is exactly what I was expecting you to answer. So my follow-up question is, what happens when all these pension funds out there that have billions and trillions of dollars to allocate determine that they need to put a 1 or 2% allocation to their portfolio, and price is not a consideration, right?
Yeah, yeah. I mean, when these ETFs came along, there was a lot of talk about there is a demand shock, and which is true, but there is also a supply shock, which I don't believe it, because Bitcoin doesn't really have a supply shock because 19 million bitcoins they will be traded if the price is right.
Right.
So so you can have the same Picasso painting can change hand 10 times if the price is right. So I don't think there's a supply shock. There is a demand shock. So the price should improve, price should increase, and as long as there is no error in the protocol. This is going to be very good asset class for a lot of pension fund. It improves the profile so well that you don't need too much of it. You just need maybe 1 to 3%, as you were talking in the beginning. I started with 0.5%. I'm going to increase it at some point of time. Some of my gold will actually rotate into Bitcoin, but I do think that 1 to 3% is good. 3% may be even higher, but 1% could be pretty good because you have to also look at the downside that if we all have to make 7 to 8% per year, and if you lose 1%, you can make it somewhere else, private equity, real estate, and all this thing. But if you lose 3%, is then you may miss the target that year.
Ajit, do you ever foresee, I know the ETF's a great vehicle. Um, you know, there's the companies that run the ETF, sometimes they still have issues here and there. Do you foresee a day ever where pension funds have a digital asset division internally, and perhaps even because Bitcoin is not like gold and you don't have to put it in a safe, where they may one day hold their own Bitcoin and they're in their own custody? Do you anticipate ever something like that?
It is possible, but I don't know how. I don't know who would do it though, because like there is a fiduciary duty, and there is we are um, um, there is a lot more eyes on us in terms of because other people's money, right? So we had to be a lot of audits and this and that. And all that. So I don't think a board or investment committee will allow CIO to hold the custody for the fund. No. I mean, it has to be, if I had NIDIG or Coinbase available to me at the institutional level 5 years ago, I would have done the Bitcoin 5 years ago. The only reason I did not do it because I did not have institutional level custody mechanism.
What do you say? Okay, looking at the landscape for pensions, right? I find it fascinating that on average, pensions on average have not yet closed the gap of unfunded liabilities that was created from the financial crisis. In fact, some pensions are in big trouble. Joe's in Illinois, and obviously Illinois has incredible challenges. Their top 5 pension funds are funded 44 cents on the dollar. I saw Dallas, where I just was for a conference at BitBlock Boom. Dallas Pension Fund is funded, I think it was 39% in January of 2023. You have you're in a great position from your incredible work in protecting and growing that fund. What do you recommend as a strategy for some of these funds that really are in a tough spot and have no solution? Is it the same conservative strategy, or do you recommend them taking more of a little bit bolder of an approach with Bitcoin to help close that gap?
Well, that's a very interesting question you ask, because Illinois Pension Fund, their crisis is not because of the investment returns, it's because the contribution. The city is not paying their part, right? And then Dallas Pension Fund is outlier. It actually had a fraud, pretty huge fraud. The CIO got fired, and all that. I think they may be even having arrest warrant on the CIO or something like that. Um, so Dallas is outlier.
Yeah, it's like the museum building or something.
Yeah,
Oh
yeah,
yeah,
yeah. So they went little bit the concept. They stretched the concept of fiduciary duty little bit more. Um, but yeah, in terms of yeah, pension fund gap, right? Of course, you want diversification. You want asset class which has a lot more positive skew and contribute very little to the uh, downside, right? Now, it used to be that Bitcoin used to, when after the cycle top, it will go like 75, 80% down, which is the reason a lot of institutional investors would not touch this thing, right? Because if you come into the wrong time, and we did come into the wrong time, we bought Bitcoin at 58K, then it went to 16,000, right?
Wow.
But we held it because we wanted to hold for at least 2 halving cycles, right? And having 0.5% allocation helped, because it didn't move the needle, because other asset classes helped uh, uh, cover the losses for that thing. And now this thing doing well. Now, so you need an asset class which actually diversifies, it actually contribute to the return, and you have a proper exposure, proper allocation to that exposure. So 1 to 3% of an asset class which actually has a very high positive skew, um, based on historical data, I think that skew will go less now, because institutions, they don't trade emotionally, right? So but even then it has a better stats than gold, or some of the other asset classes, even public equities.
Mhm.
So I do see that people do have to have it. And as I talk to more peers, it used to be like, when I used to say, even bring the name of it, it's like subject will go nowhere. And now there is a lot more discussion. It's not just here. I'm having discussion globally. Like, I'm going to other countries, and when I talk to them, I'm not ridiculed right away by definition.
have you looked? And guys, by all means, I'm firing, and because I could ask Ajit, I could have you on
Yeah.
here for 12 hours for me personally, but I know of with our time. Have you looked into the energy side of Bitcoin? Again, going back to CalPERS, they're under tremendous pressure to divest from oil and gas holdings. They are the largest investors of any public pension. Of course, they're also the biggest, so it's not unfathomable that they be the largest holder of oil and gas. But they're committing 100 billion to climate investments, and You mentioned the ESG attacked your holding of Bitcoin, but Bitcoin is incredibly nimble and pursues the most incentivized, cheapest energy. Over 50% now in a recent study is in renewables. Do you see any side of that where Bitcoin can also be an infrastructure play in investing? You're
Yeah,
in Texas, the home of Bitcoin mining, where that could also be a part of the portfolio?
yeah. I think Bitcoin can become an infrastructure play, definitely, the mining part, because byproduct of Bitcoin mining is heat, right? And heat can be sold, particularly if we have a self-contained modular miners, which are actually installed with the big buildings air conditioning unit at the same time. You can actually take the electricity, mine the Bitcoins, get the heat, and use that heat to heat the building, right? So the byproduct of Bitcoin is heat, and heat could be used. So it could be very efficient, right? And we, as a Texas fund, we have a lot of oil wells in West Texas. And when China banned the Bitcoin miners, some of those miners came, and we actually gave them our flared gas. In fact, for us, it was more environmental friendly, because a lot of these fracking oil wells, um, they don't last long enough to create infrastructure of pipes to move the gas away, right? So it just flared away in the atmosphere. So if the Bitcoin miner is sitting next to it, that gas is not flared, and it is being used for something useful, right? So we did that thing. It also helps moderate the load on the grid. So the whole ESG argument, it only registers at the first level, as a headline news. But the moment you start digging into it, and now there is so much data into it, that their argument does not hold very well. In fact, if anything, it is more ESG friendly than anything else.
Yeah, to your
Y'all heard it
first
here.
point,
Bitcoin.
to your first point on heat reuse, like I'm CIO at Swan, but I'm also head of mining. And I'll tell you, we have a project in a very cold state where we have the Bitcoin miners are going to be coupled with greenhouses to warm the greenhouses, and things that couldn't be planted, in those cold states now can be planted, and you can harvest that, and we get paid for the heat. So the energy cost decreases significantly from where it was. So
Yeah.
this makes a lot of
Particularly
sense.
if your miners are liquid cooled, then you have a lot of heat capture, pretty much.
Yep.
So, Ajit, I got to jump in here because I want to go back to something you said earlier, and you were speaking my language in something that I've said personally, and I think it is a great way to explain Bitcoin to certain classes of investors. You described early on, I think, and I don't mean to misquote you, but I thought you said in 2021 you were describing Bitcoin, the protocol, and making the case to the investment committee that this was like a call option. I thought you said like on an alternative system, and then at other points during the conversation. You sort of made Bitcoin. You gave it an example of being akin to gold. How do you reconcile those two things, and which do you lean towards one more than the other in terms of a talking point for talking to other CIOs of pensions? I'll just full disclosure. I really like the first one. I really like the idea of it, being an alternative system, the call option on an alternative system. But what do you think?
Well, it depends on the audience, right? I mean, if the audience is technical, then I will actually go to a different level of discussion. If audience is financial people, then I will go with the call option thing, because call option is all about managing the risk, because your downside is limited, right? And
Right.
upside is unlimited, right? So that's why I use the call option for our investment committee. But if I have technical people, I would actually say you should see Bitcoin as a protocol, and an app at the same time. If you look at the TCP/IP, the value is accumulated not at the TCP/IP level unless you own shares in Cisco. But all the value is accumulated on the apps like Facebooks and Googles and all those things which are built on TCP/IP. But in case of Bitcoin or Ethereum for that matter, both you can invest in both protocol and the apps. What apps have come, we don't know at this time, because it is still very young thing. Like when we were in year 2000, we did not know that we will use internet to stay in strangers home or ride in strangers cars, or you know read the books on the screen. But so apps have not come yet. But this protocol is still development stage. So at this time, but in case of internet, you could not really invest in protocol. You have to buy the shares of Cisco or something like that. But here you can invest in protocol by buying Bitcoin itself.
That's great.
Ajit, I know Hafa has some numbers, but one thing I just wanted to ask you on Bitcoin, the story of pensions to me have always been about third party risk. And pensions that have done well have third parties or direct investors that have done incredible work like yourself to protect and nurture that pensions, and other ones where there's been trouble, as you mentioned earlier, third party risk. It's great to hear that you guys shifted because of some of the more third party risk was Ethereum, that you shifted into all in on Bitcoin. What message would you have for other pension funds that may get caught up in what we anticipate could be another replay of third party individuals that are trying to,
Yeah.
replicate Bitcoin and use, fancy buzzwords like blockchain and projects and the Celsiuses of the world, the FTXs of the world? What advice would you give them as far as Bitcoin having the least amount of third party risk?
Yeah, I think we had to. My advice is that one has self-educated quite a bit, because the discussion on this thing can go very convincingly and very different corners. Like when I was in Singapore and I visited Indonesia also, and I tell you, there were like at that time there were so many proposals coming to my desk about this and that, DeFi and this and that, and a lot of times I just don't understand the basics part of it. So, you made a very good explanation of things happening from A to B, B to C, and all the thing. But where exactly is the money is being made, right? I mean, when you have an asset, at some point of time, that asset has to cross over to physical world. Like money becomes foundation of the building, or it becomes a plant or something like that, right? But a lot of these digital assets, I could not see where it enters into the digital system but it doesn't exit anywhere, right? So that was my litmus test, that this is not worth the investment. But third party risk is very important, because a lot of these protocols are still very new. I mean, example is very clear on 2000, when if you put .com at the end of the company, your IPO will become tenfold, right? And a lot of those companies did not survive. And I would say, I would posit that 99% of the DeFi protocols and coins which are coming out, they will all fail. I actually told it to my investment committee that 99% of this thing will fail. So we need to work with the most secure ones, which is the longest history and most tested, which is Bitcoin and Ethereum. But the Ethereum ran into the legal problem, so I came out of Ethereum. Bitcoin was never into legal problem.
And now has more clarification than ever with the ETF, and great for you all. Hafa, did you want to share some numbers? I know Hafa is he's a mad genius when it comes to portfolio modeling, and I know he did some stuff with the fund and things, so we can pull those up and just go over them real quick as we approach the hour.
Let's do that. Yeah. And, just like Ajit, as I said, I love coding. So I've built some tools that a lot of asset allocators can use it for free, pretty much, on Nakamoto Portfolio. But what we did, and Ajit, this is very, very basic, but just to give an idea, as you said, at the end of the day, of how Bitcoin behaves compared to other asset classes. So very high level, we picked up the last asset allocation that it's online. And I know this is probably not exactly what you have right now, and we're going to be using proxies, but the goal here is not to be precise, as I said, just to show how some of these assets would behave across asset allocation. And just very quickly, anybody can do this. I'm going to share the other part here. So this is Nakamoto Portfolio. It's a website that anybody can put any portfolio. So what we did is we went through here to run the numbers on portfolio analytics, and you can build any portfolio here. So you can say I have a portfolio with S&P, and you're going to say, okay, it's going to be 60% S&P, and then a portfolio that has bonds, for example, and this is going to be 40% bonds. and you can set up dates, start date, end date, and then different allocations that you want to simulate for Bitcoin. So we did this, and we did this with the portfolio that I showed in the beginning with some proxies for the large asset classes. And this is something that we've been doing not only with pension funds, but with family offices, endowments. We had some conversations with endowments as well, because it speaks their language, right? They're going back to Markovitz portfolio theory, which is something that most of them do for all of their assets, all their portfolios. And when you show this, and yeah, like we can change the time frame here. And usually what I'll do, I'll start with larger time frames, and then I'll go shorter time frames, 10 years, 4 years, 6 years, 2 years, and then show the results on different time frames. As an example here, we have a time frame that it's from 2010 until now, so a little bit over 6 years, with an annual rebalancing of weights between the assets, right? And if you look at the portfolio, the original portfolio, which is the green line here, what you show is an annualized return of 5.8% with a 14% volatility in this case, right? And again, this is pure beta. It doesn't have alpha. If you have better managers, of course, you're going to be outperforming. But the point here is to show that when you add Bitcoin to a portfolio like this, which are the lines down here, so here I simulated a 1, a 2, a 5, and a 10% allocation to Bitcoin. And what you see is that returns go up, and everybody talks a lot about volatilities go up, right? Because everybody talks a lot about the volatility, that the risk is higher, and yeah, it is higher. But the returns, when you look at annualized returns here in this column, they go up much more than what the risk goes up, and that's reflected on higher Sharpe ratio, right? So as an example here, this portfolio had a 0.25 Sharpe ratio originally, and just a 2% Bitcoin allocation actually brings that Sharpe ratio up to 0.35, which is a very simple way to show that, not only the volatility, of course, it's added not proportionally to the risk, but there's some lack of correlation here, right? The drawdowns don't increase significantly, as you can see here. And again, I'm not going to go through all of these, but this has been something that it's very powerful when showing, just on a back-tested basis, of course, looking at historical returns. But if you look at Bitcoin in a portfolio, it does not do the things that you usually think about, even in drawdown, right? If you see the original portfolio in periods of large drawdown, the drawdown with a 5% Bitcoin allocation, it's not significantly increased compared to the overall portfolio. There are two charts here that I think are my favorite ones. And again, I'm actually not going to go through all of them, but just showing annual returns of Bitcoin compared to other assets. And you see, to your point, Ajit, that years that Bitcoin is up significantly are years that kind of outweighs the rest of the portfolio. And then some years that, when it's down, it may not be necessarily years where your whole portfolio is down significantly, right? And then when you optimize, when you look at optimization and just say, okay, let's say I have all these assets, I don't have the weightings, right? But I want to get to the optimal risk return that I could have with the assets that I have. And the right answer is not only Bitcoin, it shouldn't be a 0% allocation, but in this case, with these assets, the optimal risk return, the star here on the efficient frontier, it's a 23% allocation to Bitcoin. Of course, this is very, very far off from any pension fund, any endowment, and actually individuals as well that are just starting. But if you want to use the same tools that a lot of financial advisors, asset managers, CIOs, hedge fund managers use for asset allocation, and you look at the answer, even using different tools, right? You can see that the answer is never a 0% allocation to Bitcoin. And just to finalize here, something that it's always good to show when we run these numbers is what we have here in this Lego-shaped chart is showing if you walk along the efficient frontier, right, and you look at the optimal allocations that you have, so from the less risky portfolio that you can build to the most risky portfolio that you could build with these assets, right? Bitcoin allocation is present on every single portfolio, which is the blue shaded area here. So even for the very risk averse client, of course, they shouldn't have a lot of Bitcoin, but 0 is absolutely not the answer. And as you run through the risk profile, so if you get towards a risk that is closer to equity-like, which is between 10 and 15%, they're showing that an allocation to Bitcoin should be somewhere between 15 and 20%, which I think people are going to realize with time. But as we said in the beginning, a 2% to 5% allocation seems more than fair when they already have allocations, as we know, to hedge funds, private equity, right, venture capital, things that, in my view, have much worse risk-adjusted returns and transparency and liquidity than having Bitcoin on top of that, right?
I think the efficient frontier argument is very good because it does improve the efficient frontier. It actually takes you to higher and not too much or right words, right? So efficient frontier is a very good argument. I do feel that 2 to 5% is still large amount because it's still quite volatile, and if you have a risk budget, it will blow out your risk budget, right? That is why I think it is about 1% is I would recommend. Also, it is better to start with 1% and go to 2%
Yep.
instead of going to 3% and they say, "Okay, I'm going to go back to 1%," because that like almost like saying to the investment committee that your allocation is not working out for you.
Mm-hmm.
You know.
You're right. Like the other thing, you're absolutely right. We usually go through this as well, which is equal risk contribution, right? So if
Yeah.
you had a portfolio with equal risk contribution, then you'd see that Bitcoin is not 20%, right? It's 5%. And again, for somebody that started, they shouldn't start at 5%. They should start at less than that. Yeah.
Yeah. But I do feel that I would say in 10 years, as Dom was saying, I think I would be surprised to see any pension fund with no allocation to Bitcoin. There will be something there.
Yep.
Unbelievable. Well, any last things before I wanted to say something super important here. Is there any kind of last questions before I kind of tie things up?
Oh, it's phenomenal. It's great to have a CIO that gets Bitcoin and has Bitcoin in a portfolio. That's amazing.
Yeah, we really appreciate a lot of the comments. I'll just share with you about how level-headed your approach to Bitcoin is. You get some people that go very over the top, and I think it was great, your presentation, sir. So thank you so much for joining us.
For sure. And I want to say something as a firefighter, an active firefighter. A lot of people can't understand, they cannot fathom the burden that is carried by an individual who has to invest with the futures of 3,700 firefighters that risk their lives every day and their entire family and the future of their family. And to do what you did, Ajit, and introduce something that's forward looking and have conviction and lay it out, and to perform how you have with the portfolio is one of the most courageous things I think that we've seen in Bitcoin to date. It's one thing for Michael Saylor, who runs his own company, to take, heavy risk and do that. It's another thing when you hold the futures of these families in your hand. You've done an incredible job with the fund since you've got there. And as a firefighter, I would be honored to be a part of your pension system and have you at the leadership role. So I hope that your firefighters appreciate you. I'll make sure I call all the Houston firefighters and let them know that they have an incredible all-star, someone that really cares about them. And it's just really refreshing to see. It's inspiring. So thank you so much for what you're doing. And I think you're going to see Bitcoiners are going to be huge fans of this, but I hope that the other pension funds are too. And they need your wisdom, expertise, and what you've been through in navigating this cycle, which is, as we mentioned, the very beginning stages of an institutional adoption cycle. So
Thank you very much for inviting me, and thank you.
Thanks so much. We're going to let you free right now to go do your great work. And then the Gauntlet board is we're going to talk through the portfolio. Guys, I'm like a little bit just blown away right now. I didn't know that, as from him downloading the code, this is I'm going to need time to process this.
How cool is it that he tailors the message to the crowd that he's speaking with, right? Like, isn't that fantastic? The fact that he says, oh, well, if they're computer scientists, they're more sophisticated, I'm going to communicate like this. But if they're more just retail, I'm going to describe it as digital gold. But if they're, more of a financial background, I'm going to use derivatives. Like, that's awesome, right? Like, and honestly, that's probably the right strategy, right? With something as complex as Bitcoin, know your audience and communicate it the right way.
Yeah, 100%. And I think this is going to be the easiest, after show meeting we have, because he has done the work, right? I think he is on the right track. He already has an allocation that it's small, but he already said it has, some part of gold that he's going to be allocating to the portfolio. And I think he's going to land with exactly where probably a range similar to what we were going to be suggesting, right? Which is awesome.
Yeah, I mean, I love that he pivoted and the reasons why. Joe's talked about this so much in the space about the uncertainty and the superiority of Bitcoin without, getting too much into blockchain as a technology. He understands it and actually made the pivot with funds. So he's probably in a much larger green position than we thought.
Guys, look at the quotes we got from this episode, right? We got a quote where he says, I'd be surprised if every major pension fund isn't talking about this right now, and every major hedge fund doesn't have some exposure in the next 10 years. I mean, he's going out there making this argument, which I was curious to talk to you both afterwards about this notion. We've got we've got exposure now from some of the early days of the Gauntlet episodes that have doubled or tripled, right? And there's going to be this push to try to rebalance, right? Because that's just in their mindset. They always want to rebalance, reduce it to target. I'm curious, does your model allow for that, like on the Nakamoto portfolio theory? Can you?
It does. We can change it. Change it for order. And Joe, we've been having this is big part. There are two things. After they decide that they want to do all an allocation, right? So we're talking to a family office, and the family office will come in and say, yeah, I've decided I want to allocate. So there are two follow-up questions. The next one is, how do I get in and how do I rebalance, right? Mm-hmm. How do I get in? Our suggestion is usually, okay, now that you determine that you want to get in, my suggestion is to allocate as quickly as possible, right? So if it's a 1% allocation, just allocate for all the next week, next month, but allocate, start allocating right away, right? And the rebalancing one, it's a tricky one because this is an asset, and I think Ajit has the right mindset, that has long cycles, right? Mm-hmm. I've been telling everybody, like, I know we rebalance quarterly, I know we rebalance annually in some cases. For this asset, you should come in, maybe resize it, have a lower size than what you would think about. So if your target is 10, do 7, right? But don't rebalance every year, don't rebalance every quarter, rebalance, and that takes them a little bit by surprise, but rebalance every 4 years. That should be your mindset, right?
It seems like the cycles are getting longer too. I don't know. Is that true? I mean, maybe my anecdotal observation's wrong on that, but what do you think about that?
It's hard to say because we haven't had that many cycles, right? It still blows my mind that if you actually look at that spiral chart, right, you see that we hit the bottoms close to the same. Part of that may be coincidence, right?
Yeah,
so it's hard to know, and we don't have enough data sets. But yeah, it does seem that naturally the cycles are going to get longer. They're going to be less volatile, right? That's more and more adoption gets into place, right? But I think the good news is that we'll see less volatility on the downside, but we'll see more volatility on the upside, right? Bitcoin is this weird asset that moves most of the times, doesn't go anywhere, actually goes down. And then all of a sudden you have either this supply shock or whatever. You just eat through all the marginal sellers of Bitcoin, and then you hit the hodlers, and good luck taking the Bitcoin out of their hands, right? So price explodes up in these periods. And I think we're going to see more and more of these. I asked him the question around, okay, so what happens if all the pension funds out there determine that they need to have 1% Bitcoin in their portfolio? And we can't even imagine what would happen. The price they wouldn't be able to allocate because price would go up, so quickly, so exponentially.
But did you hear what he said? I'm sorry to interrupt you, but I got so excited about this because it's awesome and it's so spot on. Dom, we've talked about this in Cafe Bitcoin a ton of times. They're like, we don't care about price. Price doesn't matter, right? We care about allocation. So like,
love it.
I mean, just think about unpack that for a second. Literally bid. No care, unlike retail, I don't care if it's 68, 52, 54, whatever. Bid, I want my 1%. I mean, talk about a bullish, talking point from this episode. Man, that was awesome to hear.
Yeah. And some other great quotes. He said, there's absolutely no reason if you're a fund holding gold not to be allocated to Bitcoin. He said Bitcoin was superior to gold. So we'll make sure to get that to Peter Schiff. And, additionally, it's going to be very interesting, the dynamic. You all know better than me. I know he mentioned the supply shock, which I thought was a great point because, Joe, you've always talked about that look, at certain prices, new supply will enter the market.
Yeah.
But with the auto rebalancing of pension funds and people coming in and everything that's on the sideline, it's going to be fascinating to watch how the supply dynamics and demand kind of balance out combined with retail. And it's, again, this goes back to the fact that we are not even in inning one. He mentioned that more pension funds that we would expect are talking about it. They just need to figure out something that Ajit has already figured out, how to package it within a pension fund, how they're going to communicate that to the legislators that oversee the fund, the participants that, are part of the fund. And I think Ajit is going to be this incredible tool for the pension and institutional community by far.
He's already doing it. He said he was sharing, sort of his playbook with others, and it's a great point he brings up that every Bitcoiner should remember is what he said. Look, there's career risk. We don't want to go forward with this asset that we know there needs to be an allocation to and screw it up, because that becomes public record and it's really hard for them to reverse course. So, just think about that. That's just telling you, the institutional adoption wave is coming, right? But it's going to take longer than you anticipate, which to me is extremely bullish, right? You can take away from that the wall of money is actually coming. It's just, the one we've heard about it for years, but it's just now it's finally getting to the point where people are going to go forward and make the right pitches and get the approvals they need.
And fundamental reason to justify what you said, that the cycles are going to be longer, right? Because this capital is not going to be flowing in all at once. It's going to be dripping in through years to come, right?
So now look, hey, the gauntlet, our track record ain't too shabby right now. We got 140%.
We were lucky.
We're lucky, but I mean, this is the one situation where I'm like, I don't know if we can beat Ajit's what his plan is, because he's really solid, and the fact that his fund is doing so well. What are we thinking for our allocation on the show? We've been kind of consistent with a 2%. How do we want to shape this and peg it to the show for our board, our illustrious gauntlet board?
Yeah, I kind of mentioned it already, but in his case, I think 2% is probably right. So I would put that at the bottom of the range, right? So I think an allocation between 2 and 4% seems appropriate given what we saw in the results, what they already have, the level of comfort that they already have in Bitcoin, the fact that he survived the bear market, right, and could withstand the volatility. He said, we bought at 50, 58, 56, and it went all the way to 16, and here we are. We're fine, right? So he would definitely, in other situations, people would have took down that allocation, right? So I think they can probably withstand a large allocation than the other pension funds that we made a suggestion. What do you guys think?
Yeah, I generally favor smaller allocations, but in this case, he revealed to all of us that for some reason he's still holding gold. So what was that, 2%, Dom? He's got to dump that. So let's make my votes for the 4% Bitcoin allocation. Let's do it.
Okay, and then in place of our good brother Greg Foss, I'm going to go 100% allocation and basically empty both chambers of everything in there, and let's put it all in. No, I think all right, at 2 and 4, I'm gonna go. Let's split it at 3. Let's peg a good 3% in there. I like what Ajit said about better to go 3 and bump up to 4 than to scale down. So let's go 3%. I would like to see this is something I think is going to be very big for pensions. And I love that he mentioned it. They're going to have to create their own rebalancing parameters that are a little bit different and kind of alter those as Bitcoin goes along and the cycles change. So I mean, if it was my pension, I would love to see those widened out a bit, but I understand they have, those are bigger conversations with investment committees and things. So I'm going to go 3%, split the middle. If y'all are good with that, and we peg it at 3% for, unless you guys have any arguments against.
No,
be the only time I ever underbid Joe. The only time.
If you think about our allocation to Wisconsin, right, that was 2% initially, but that already became 5%. So I mean, it's not off.
Yeah, they would have had to rebalance. So
for sure.
Yeah. Okay. Well, unbelievable, guys. Can't thank you guys enough. And I mean, this was just, I'm gonna be watching this episode multiple times over, and I'm just super excited. This was such a breath of fresh air, and it's like restored my hope and push in trying to educate pension funds, and unbelievable.
How about
Yep.
the fact, Dom? Let's everybody in the comments just blow up Dom, because he was able to get a guy who literally said, "I'm not taking any other interviews but for the Gauntlet." He was able to get him here for all of us to talk to. That's amazing.
It's awesome.
It's that firefighter thing, it's just like he's like, all right, man, but no, you know what? I know he watched our former stuff, and it's a testament to you guys and the very like unparalleled calm demeanor and the proficiency that you guys bring and the understanding. And so I think this is a great place for him to lay stuff out. And I hope we see him more in this space, because I think he has a lot of good lessons for institutions. So
Agree.
thank you guys. And Foss out there, we miss you, brother. And everyone that tuned in, we'll have more to come. Again, if you have a institution that you're a part of and you want your fund manager to come on the show and explore Bitcoin in the portfolio without any risk, and with a great crew, please send them the show, share the show, and we can reach out and get them on the show and explore Bitcoin in your fund. So spread the good word. I know I'll see y'all on Spaces soon. And again, thank you so much for this episode.